On the east of the continent, Athi River Mining over in Kenya is set to join a growing list of firms headed for the bond market. And joining us now live from our studios in Nairobi, Kenya is Surendra Bhatia. He's the Deputy CEO of Athi River Mining to talk us through prospects for the company moving forward on the back of its new plans. Thanks so much, Surendra, for joining us this afternoon. Well, Athi River Mining set to head to the bond market. It's planning to raise 1.2 billion shillings. Take us through why you're exploring this avenue of raising capital and why it makes sense for you right now.
Firstly, we already have a bond which is listed on the Nairobi Stock Exchange. We had raised this bond in 2006, and that was to fund our cement expansion in Kenya. The company is now expanding into Tanzania, and we are using this instrument of bond to support the funding for the cement plant in Tanzania. The monies which we'll be raising through the bond, which will be used to fund the cement plant expansion in Tanzania.
Well, when are you expecting this bond to be issued?
The structure of the bond is ready. All the necessary approvals from the regulatory authorities are in place. In terms of the investment plan, we would probably be requiring these funds towards the second quarter or the third quarter of this year, and we should be going to the market either at the end of the second quarter or early third quarter of this year.
We certainly know that the appetite is there given the results we've seen from companies that have managed to make it a successful or launch successful bonds on the bond market, KenGen being one of them, CFC Stanbic being another. Are you confident of hitting your target?
Very confident about this. We have actually been speaking to the various investor groups. Our lead managers have been speaking to the various investor groups, and the response which we have got is very positive. Backed by the results which we have and by the project progresses which we have done in this part of the world, we are confident that we will get a full subscription.
This just 1.2 billion shillings though, and I've been reading that the firm is in need of more than 4 billion shillings for its local operations over the next 4 years. So what's the plan moving forward? It certainly looks like the banking route and getting loans from the financial services industry is not completely off the cards here.
You're absolutely correct, yes. We have several options available. This option is being used only for the Tanzanian expansion. We have a power plant which is in the pipeline. We are discussing with various institutions. We have different options available. We have equity, we have straight debt from the banks, we have development funding, as well as we have quasi-equity instruments available. Going forward, we would be using one of these instruments or a combination of these instruments to fund our other expansions. Over the next 12 months, we are focused on getting Tanzania plant up and running, and this funding would be specific for that plant.
Well, let's take a look at your operations in Kenya. I mean, boosting cement production capacity to allow you to tap into this growing demand by the industry for the cement is pretty, evident. Kenya is over the next 2 years positioning its manufacturing sector to actually become the nerve center of growth in its strategic plan that seeks to remove hurdles for production, enhance the country's capacity. What are some of the challenges you face as a cement producer in Kenya specifically?
The biggest challenge we face is the energy cost, of course. Our energy costs are significantly higher than any other country, especially the countries which export cement into East Africa. Energy cost would continue to be our single largest challenge as we go forward. In terms of market, in terms of quality, in terms of cost of production, in terms of meeting international cost and quality benchmarks in cement manufacturing, that should not be a problem. We already have the technology to achieve those.
Well, certainly, as you said, you're building your own coal-driven power plant as well. Let's look at implications of that for the business where, as you said, energy has been one of your biggest challenges. I mean, just how much do you see this new develop contributing to the company's bottom line?
Well, I think our cost of energy would decrease significantly. And in terms of pure savings, we can look forward to achieving on our existing volumes of cement saving of about $2 million additionally by putting up our own plant. Going forward, of course, there will be several other advantages which will come to the company once we put up our cement plant. More importantly, other than the price of energy, it will also be the quality of energy which will allow us to operate our plants much more efficiently and far more regularly than the existing energy sources.
Well, Athi River Mining has always stood out as a cement company that's got a diversification strategy that's working in its favor, with a focus on cement, but also on other industrial chemicals, fertilizer just being one of them. Do you see the company getting to a point where it starts using the electricity it generates as a revenue earner more directly and adding to the bottom line in that way by selling off power?
Yes, very much so. In fact, the power plant which we are putting up is a 30 megawatt power plant. Our internal consumption would only be 10 megawatts. So we would be selling 20 megawatts into the grid. Now, our plant would be the first coal-fired power plant in the country. Kenya today has either hydropower, which is the cheapest source of power, or we have the fuel-driven power plants, which are far more expensive, the coal-based power plants. So the objective is to get into the energy business, to supply a little bit of energy into the grid, as well as develop the second cheapest source of energy for the country.
Also looking to increase earnings from export markets is a focus for the company moving forward. I mean, what potential do you boast in that regard, or does domestic demand remain your focus right now?
At the present moment, approximately 70% of our business comes from the domestic market, 30% comes from export. Export markets offer a substantial potential for our products. Going forward, we would like to add capacity to tap into the export markets, either from Kenya or by setting up plants in those countries.
Manufacturers and analysts, however, have said that plans by the ministry to push for value addition to enhance Kenya's export earnings may fail if internal taxation policies are not repealed. What's your view on the current tax status and the steps that need to be taken by government in that regard to make business a little bit easier for you?
Well, it's fairly a simple rule that the more friendly the tax regime is, the larger the investment would be in the country. And the only thing which we can think of, if the tax regime can be made far more friendly for the investors, and we don't have to look very much afar, we can look in the African continents. There are several countries where there are several tax benefits offered to people who invest in the country. Now, if Kenya was to go the same route, I'm sure the investments would increase significantly in our country.
Well, so far, with commodity prices on the rise in 2010, we've got analysts forecasting a rise in cement prices as well. You saw net profits grow 32% to 300 million shillings for the half year to June 2009. What are your full year forecasts for your full year numbers and your expectations for 2010?
Well, we have declared our 9 months results also, that were declared in the month of October. And if you see the first, second and third quarter results, they were fairly stable. And the fourth quarter has also been fairly stable. We don't have the numbers as yet. The company's audit is in progress, and we should be able to disclose our audited figures somewhere in the month of March. But we expect a good year in line with the first 3 quarter results. Going forward, in 2010, we would have the increased Kenyan capacity in cement operational. We expect the clinker plant to be completed by Q1 of this year and the grinding plant in Athi River completed by Q2 this year. So we should see an increased turnover, as well as that should reflect in the bottom line in 2010.
On that note, Surendra Bhatia, let's leave it there. Thanks so much for having joined us this afternoon. And of course, we'll be tracking your earnings through this year as they come to the fore. Thanks so much for your time.